Well, cash for clunkers has certainly helped the U.S. auto industry, but what has the program done for the economy as a whole? And is the program worth all that money? Well, we're joined now by Harm Bandholz. He's an economist at UniCredit Market Investment Banking. Harm, thanks so much for being with us. Now, you say the program has given auto sales a temporary boost at the very least. I mean, is it going to be long-lasting?
No, I don't think it's long-lasting. So we know that if we do the math, there were $1 billion approved for the program, and if you assume that an average $4,000 to $4,500 in rebates were given, it helps. It spurs about 250,000 car sales. In July, we have seen an increase of 140,000. So we may have another good August.
Another good month then.
Another good month, but then the program is over as it is right now.
Okay, so will the next $2 billion, which looks likely to be approved by the Senate, at least from some indications, is that going to have as much of a big impact going forward?
I think so. So I think there was a huge pent-up demand for cars. The car sales have plunged during this recession. And right now it seems that households are getting a little bit more comfortable buying new cars, and they are supported. The decision is supported, obviously, by this Cash for Clunkers program.
And how much is all of this then going to add to GDP here in the U.S.?
Well, this is obviously the crucial question. So we know if we just do some math, so car sales are now about an annualized 90% above the second quarter average. This alone may lift GDP growth by 3 percentage points. But
in the which quarter?
In this quarter.
Okay.
But the net impact would be a little bit smaller because some cars are imported, about 25%, and some of these cars are coming from inventories. So if we look at the production side, we know that car producers have scheduled a huge increase in production, and this alone may lift GDP growth by 1.5 percentage points, which is probably about the support from the car industry as a whole.
Now, but you say, though, that the more successful this program is, though, the more likely we're going to see a weaker economy, not this year perhaps, but next year. Why is that?
Absolutely. So we expect a temporary technical rebound of the U.S. economy in the second half of this year. We had a huge liquidation of inventories. Production was down because of fears that the world is coming to an end during this recession. And now this is alleviated, and we, as I said, we expect some temporary rebound of about 3% growth in the second half of this year. But this goes to the expense of growth in the beginning of 2010. And this Cash for Clunkers program, it doesn't originate any additional or barely any additional car sales, in my view. It's just borrowing growth.
Original car sales.
Any additional car sales. Just borrows growth from 2010. So therefore, we expect a boost in the second half of this year and a payback at the beginning of 2010.
So we're just biding time here then. I mean, it's just you're borrowing growth to apply it to here, but then you're not going to get any growth later on. So then what's the purpose in the end game? Are we doing any good then with this program?
Well, the hope is maybe to ignite a self-sustaining recovery. So that you just need the ignition, and then the recovery continues to grow the next quarters. We are skeptic about it. There are colleagues of mine who expect a V-shaped recovery, and we just need the starting point, and maybe the government hopes to ignite this self-sustained recovery with this kind of program.
But should politicians perhaps entertain making this program more permanent then? If it if it really has worked, it's been so successful. I know that there's a money issue, but could it be more permanent then? Should it be more permanent?
No, I think the money issue is the real problem. So we know there's also some resistance in the Senate saying that this is basically a bailout, another bailout for the car industry. And if we would make it more permanent, it basically would give car dealers to the car industry a subsidy of about $4,000 per car sold, and this is not what we would recommend for as a permanent measure.
Okay, Harm, thanks so much for being with us and giving us some more context on this program. We've been talking about it all morning long. Harm Bandholz of UniCredit Markets and Investment Banking.